我的朋友你们好. Okay, so that means, hello, my friends in Chinese. So, I apologize for the lack of inactivity over the last couple of weeks because I was actually busy with other commitments. But hey, now that I'm back, this is actually the last weekly market analysis for the year. So, why is this so? Is because towards the end of the year, right, the markets tend to be quiet. So, there's really not much point in analyzing the markets, only to see it being pretty much where they are for the next few weeks or the next few days, right, towards the new year. So that said, right, this will be the last weekly market analysis, and in this week's market analysis, we will look at a few major currency pairs like the dollar yen, the pound dollar, as well as a worldwide view of what the major equity index are doing. So all this and more in this week's market analysis. I'll see you there. Alrighty. So this chart you're looking at is actually the dollar yen. I believe before I went for my 2-week disappearance, I think this was something that I covered. So if you look at the weekly chart, right, the trend is still up. And it basically respects the 20 and 50 period moving average on the weekly chart. So what happened is that at this particular point on the chart, where price was actually around here in this consolidation, I noticed that price is at an area where there is a possibility of it, to break out higher towards the upside, because you look over here, over here, over here, and over here. It all lead to higher prices. So I thought this was another moment where price would trade higher from. So needless to say, I don't trade off the weekly chart. I use it as a guide, as to to give me a clue to where the big picture or where the market is in the grand scheme of things. So I don't trade off the weekly chart, but I get the direction of the trend. So looking back at the daily chart, what happened at that point in time, it looked something like this, was that I see this consolidation over here. So that price was consolidating between these highs and these lows over here. So what happens there, it's like a price is like coiling up, right, storing energy for the next move higher. Furthermore, I like the fact that it formed somewhat of a consolidation just below this resistance area. Then I traded the breakout, right, with a buy stop order above these highs, stops of 2 ATR, and poof, it went, retraced a little, and consolidated in this region, and finally trading down lower. So when price was actually in this consolidation area, I shifted my stops to break even, because I was telling myself, right, if price were to break below this consolidation, chances are, right, it's not looking the way it should look, because I know that in a new trend, should price emerge, it should consist of higher highs and higher lows. So I have higher lows, higher lows, higher lows. And if you break below this consolidation that it formed, then the structure of the market don't really make much of a sense to me. So I set my stops to break even, and I got out for a break even trade on this dollar yen. And also another thing to highlight out, right, this is based on hindsight, is that there was another trading opportunity over here, which was this, some call it a hammer, a pin bar, whatever you call it, to get long. Because you know that on the weekly chart, let me bring you back to the weekly chart over here. The weekly chart is that price is in an area where it could potentially trade higher from. So when you look at the daily chart and you saw this hammer over here, no doubt that at this point in time when this hammer formed, it seems to be against the trend. But when you look on the higher time frame, like the weekly chart, you realize that it's not exactly against the trend. It's actually aligned with the trend. So it really depends on how you define the trend. If you just solely focus on a daily chart, right? Let me pull it back. If you look at something like this, at this moment when this hammer form, it may look like you are trading against the trend. But when you look at the big picture, you look at the weekly chart, you realize that, okay, you are trading against the immediate trend, but in the long-term trend, you're actually with the trend. So based on hindsight, again, what I would have done is that I would have gone long on this hammer. I would look to take half of my position off at this highs over here, because of the fact that I'm trading against the immediate trend. So there is some force against me, so I don't want to be too aggressive with my target profit. So I'll take half over here, and I'll trail the remaining half. And I'll trail the remaining half based on the weekly chart. So this is just some food for thought for you to think about on how I actually analyze the markets. So that's it on dollar yen. So up next, let's have a look at pound dollar, shall we? Where is pound dollar? Where are you, my dear? Okay, over here. So pound dollar, you can see a weekly chart. Pretty much, I would say it's a tough market. This consolidation, well, not really a consolidation, but a lower move, but it's very chopped in this lower move altogether. Right? You look at the daily chart, it's much clearer. You can see that overall it's trading lower, but it's choppy, right? With very large swing back and forth, right? You see this swing down, swing up, swing down, swing up, swing down, swing up, swing down, swing up, swing down, and swing up. So in this kind of market, if you are trading anywhere in the middle of this kind of swings, in the middle here, in the middle here, in the middle here, in the middle here, you are asking for trouble, right? Because you know it could just easily swing back the other way. So these are areas or location on the chart which I would say doesn't really deserve my attention, right? It's not a place where I want to do business. Right? I basically ignore when price is in such a, when it's trading in the middle of such a choppy area. So if you want to trade the pound dollar, what I would recommend is, if you notice that there is actually, you can draw this trend line or channel, whatever you call it. Not really too concerned with the term, but you get what I mean, right? You notice that price on pound dollar, the daily chart tends to, respect this brown boundaries over here and this area over here. So what happens is that right now I'm seeing a confluence of two things. Number one, this channel and this highs over here. So if price were to come up higher, it forms a price rejection, could be a pin bar or an engulfing pattern, right? We could see a potential move lower towards the lows over here. So in this kind of trades, it's more of a swing trade. You don't want to be establishing a position and pray that you can go and ride it to the moon. Because look at the odds. What's the odds of it happening, right? You know that the structure of the market right now is more of swinging down and up, swinging down and up. So what makes you think just because you put on a trade is going down all the way? Think about this. I think the higher likelihood is that it trades lower and then it trades higher once more. So the market really doesn't care where we put on our position. So there's really no point hoping for the best. I would rather say, trade what you see, not what you think or what you feel. Okay? So that's my take on the pound dollar. And, oh yeah, what did I say? Oh yeah, I talked about the worldwide indices. But before that, let's talk about crude oil. Okay, crude oil again, the WTI. Again, before I traded this, I said that there was a, okay, let me give you the big picture. Again, weekly chart, crude oil is clearly in a downtrend. While I think there's news or whatever speculating that, the bottom is here, some traders would say, maybe this is a double bottom, a triple bottom, blah, blah, blah. Really, I'm not really a bottom picker. I'm more of a trend follower, a trend trader. So at this point in time, I'm still thinking short, right? I would at least stop looking to short this market until this high is traded above it, right? This swing high. In the meantime, if it's not taken above, price has not taken above this highs over here, I will still look to short. So my bias for crude oil has been short all the way. So on the daily chart of the WTI, I noticed this potential head and shoulders pattern. This was the neckline, and I was intending to short the neckline over here. So, but before price could actually break below the neckline, I noticed one thing. I noticed that the Brent crude oil has already broke below its neckline. So I went with the Brent crude oil instead of the WTI because it was appearing to be weaker. So I like to short the weakest market. I like to long the longest market. And at this point in time, the Brent crude oil was, needless to say, the weaker market. So I short the Brent crude oil. Short the breakout. Price went in my favor and had to endure a little bit of pain as price, retraced higher against me. So come and think about this. What would most traders do, right? Most traders, maybe they were like me. They shorted the breakout. Stop loss somewhere over here. Price traded in their favor. Then they say, oh, okay, Rainer, I'm going to shift my stops to break even. So I push down my stops all the way to break even. Over here, somewhere here. Then price rallied higher, stopping you out for break even, and then poof, traded lower. Can you see what you did there? Does this really make sense to you? Because think about this. I'm sure you know basic technical analysis, right? When price breaks below support and it trades higher, previous support becomes what? Previous support becomes resistance, right? This becomes an area of resistance. Am I right? So if you know this kind of basic technical analysis and you're trading the breakout and you know that previous support would become resistance, there's a potential of it happening where previous support become resistance, and you shift your stops to break even. Aren't you going basically, exiting your trades where price could potentially reverse from? You're basically exiting your trades at an area where price may reverse. So think about what you're doing actually, right? So your first entry here is a short, right? You had a sell stop order. It's a short. You sell. Okay, let's call it short. And you put your stop loss, your break-even stop loss over here, where your entry level, because you're in the money. So when price traded higher, what is the order that you need to get out of the market? Well, if you're short, then needless to say, the order to get you off the market is long. So what you're doing is actually going long into previous support becomes resistance. Does it make sense? So I think this is something to really think about, right? On why you shift your stops to break even. I'm not saying shifting stops to break even is wrong, but I would say you want to shift your stops to break even only when it makes sense. Not based on how you feel, or based on how your P&L is looking, or based on your fear of giving back profits. That is not the right way to go about. So just something for you to think about. Okay, so that's my take on crude oil. I'm still short, and we'll see what happens next. And last but not least, I promise you that we'll talk about the worldwide indices. So let's first have a look at the S&P. So again, it's a crazy market. I'm not even in this market. It's not worth my effort. Not even worth risking my money on it. So you look at the weekly chart, it was respecting the 20 and 50 period moving average pretty nicely. Then we had this sell down. There it is rally up. And right now price is consolidating somewhere here. So in the weekly chart, if you think it looks bad, look at the daily. It's worse. So this is why I say that I'm staying out of this market. So you can see, right, this was the sell down. This was the somewhat of a consolidation before it traded higher, almost retesting the highs over here. Then it started to, consolidate between the highs and lows over here. So in the grand scheme of things, it's still bullish, but in the immediate term, right, on the daily chart, I would say it's more of a range. And Nasdaq, again, very similar story. But I would say among all the worldwide indices, the US stock market is actually one of the stronger ones. Because if you look at the DAX, right, the German DAX, on this daily chart, doesn't look pretty at all. You look at the weekly, it's even worse than the US counterpart. So daily chart definitely not looking pretty, and based on the structure itself, this is the previous resistance turned support. This is the lows. There's a good chance of it retesting back these lows over here. If you look at Euro stocks, again, similar story. You look at the FTSE 100, gets even worse over here because it's now trying to retest these lows over here already. Nikkei 225, well, not too pretty, but at least looking better than the FTSE 100. The Hang Seng, again, looking pretty bad. ASX, not looking pretty as well. STI, not any better. So you can see, right, the overall sentiment in the worldwide equity indices is not looking pretty at all. Right, the strongest right now seems to be the US stock market, and the weaker seems to be the Asian stock market. So really, right, if you're a trader, you shouldn't be too affected because you have your stops in place. I think what I'm worried for is those investors who are basically investing heavily at the market period like now. Because when they invest, the last thing that is on their mind is where they are going to exit their trades or their investment. Chances are they'll hold and pray till God knows when before they exit their trades. And usually they exit their trades where the point where the market has bottomed. So again, right, I think this is just to a shout out to those who are investing, right? Looking at the worldwide equity index is not looking too strong at the moment. If you're an investor, fine enough. Right? If your investor is not wrong. I'll say what is wrong is that you have no plan to exit your investment. Then that is wrong. Right? You could be exiting your trade based on a fundamental, a technical, or whatever reason. But you need to have a plan for exit. So, okay. So that's all I have for you in this week's market analysis. Right? Just because this is the last market analysis for the year doesn't mean you're not going to hear from me. Right? I'm still around. I intend to, provide more educational materials in the coming weeks so you can actually, improve your trading knowledge coming into the holiday season. So if you have any questions, any feedback, feel free to leave it below. With that, I wish you good luck and good trading. I'll talk to you soon.